In the main market, Microsoft hit record highs, and stocks extended their winning streak as bank earnings spurred optimism. Gold hit a 7-week high, and Microsoft closed at a record, revealing the pricing for a new AI subscription. We'll look at the technicals in the crypto and the main markets. We'll also investigate where things could be going next. Stay tuned, it's going to be a fantastic video. In the past trading session, Microsoft did very well. It rallied hard. Let's turn on the Smart Money indicator to see where Microsoft is coming up against either support or resistance. Turning on the CTKS Method monthly service indicator, we can see Microsoft is under resistance. It's done incredibly well. Let's just drill into those levels. We can see there's resistance above at that 368.49 mark. There's support below at 358.84 and stronger support below at 355.28. The thing to note, when the CTKS method is applied to a particular chart, it marks up all of price action. In Microsoft's case, this is from 1986. Typically, people will use recent indicative price, which creates story-based analysis. The CTKS method doesn't do that. It marks all of price history. In the past trading session, in the main market, we can see the fear gauge of the market, the VIX, is still suppressed. Junk bonds, which indicates risk-on activity, is coming up. That's a good thing. That's reflecting itself into the major indices such as the Nasdaq, and we'll look at the S&P 500 shortly. Oil is still surging up. Bond prices are going up while bond yields are coming down. That's very good for gold, which is rallying at the moment, spurred on by a decrease in the DXY as well as yields. Looking at the S&P 500, which is marked up through the CTKS method since 1871, when we pop on the indicator, what do we notice? There's a lot of incoming resistance around that 45.70 mark, upwards to 45.73. It's been fairly clear sailing at the moment, but we're going to start to encounter resistance. Let's drill in and have a look at crypto. We can see Bitcoin in the past 24 hours. It did indeed spike down. We'll look at the smart money levels to try to figure out what's going on here. And it's just baselining at the moment. There's some very interesting things happening in the crypto market that may surprise you. Looking at Ethereum relative to Bitcoin's gravity, Ethereum is showing strength. What about XRP? Showing a lot of strength. BNB showing strength. Solana showing strength. ADA is showing strength. Doge is showing strength. And poor old Matic is under the water. With the XRP win, we are tracking 13 cryptos associated with the Coinbase SEC action. They are Nexo, Flow, XRP, ICP, ADA, Axie Infinity, Solana, Chiliz, Filecoin, SAN, Near, Dash, Matic, and VGX. One thing to keep in mind, the Litecoin halving is about 16 days away. The EDX Institutional Exchange is the place where institutions go to buy crypto. They've currently got a choice of 4 cryptos: Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. These are really good to keep on your radar. I just wanted to take a moment to express Kate and I's deepest gratitude to each and every one of you. Every day, we're humbled by your support and your engagement. Reading your comments, seeing your reactions, it truly makes our day. You are part of a global family that we've all built together. Your support fuels our passion and inspires Kate and I to create better content for you every single day. From the bottom of our hearts, thank you. To determine the direction of the crypto market, it's really important to look at total crypto market cap first, and this is marked up with the CTKS method. Let's pop on the indicator, and what do we see? The total crypto market cap. As an industry, every single crypto is represented in this chart. We can see this beautiful level of support, 1.153 trillion, held incredibly well. And the higher one here at 1.155 trillion. We're just coming up to resistance at this 1.16 trillion. But if we get over here, the crypto market could stage a big technical bounce. That is positive price momentum to the upside. It's very important to understand Bitcoin and how Bitcoin controls the fate of the alts. Let's pop on the CTKS Method monthly indicator. And what do we see here? There are levels of support inside Bitcoin's price action that Bitcoin hit. The buyers came in and drove Bitcoin's price higher. There is a level of resistance around that 29,000, just under 30,000. So we'll need to keep our eye on this, but overall it's looking pretty good. And Bitcoin is currently 29,833. You can also draw up your own charts and overlay the CTKS method yourself. You will require Level 1 and Level 2 CTKS Method Certification. Level 1 will give you the foundation and fundamentals, and it's applied to the SPY. Level 2 is where all the magic happens. You have a strong foundation in Level 1. In Level 2, you create the structure. It's so important to understand that you need to put the time in to mark up your charts if you want to know where smart money is buying or selling. When you mark up your charts with the CTKS method, which is the world's most advanced smart money buy and sell level detection system, you'll join the elite 5% who know and leave the 95% who guess behind, and you can learn it once and apply it for a lifetime. You could be tempted to say this is just a line on a screen, it's nothing special, but it is actually very special. When looking at total crypto market cap, and you can see it immediately right now, that particular resistance level around that 1.16 trillion is being rejected just currently. If we get above that, the entire crypto market could turn around. Looking at the crypto market, we can see that Bitcoin is down just a little over 1% in the past 24 hours. The greatest gainers top 100: BIT, XRP, SUI, TON, APE, XDC, Flow, Bitcoin Cash, and HBAR. The greatest losers top 100 past 24 hours: 1inch, Comp, Matic, DYDX, Woo, Solana, Gala, Algo, and Lunacy. One thing to always be aware of: greatest gainers can turn into greatest losers. The strong do become weak, but the weak do become strong. As you've stayed to the end, I'm going to give you a special bonus, just explain a little bit more about Rule 239, CTKS structure overrides. This is a very, very important concept. I'm going to apply this rule specifically into XRP's price as it relates to SLs. We're going to also look at Bitcoin and total crypto market cap. We'll start this analysis with total. When we pop on the CTKS indicator, one thing that we note is total crypto market cap. The levels of support, smart money algorithmic support, are very, very strong. No wonder why the total crypto market bounced, because it came into CTKS structure. And look at that, we're almost getting over our $1.16 trillion mark as anticipated. What happens when we look at Bitcoin? Let's pop on the CTKS indicator. You can see instantly that the lines aren't thick, they're not heavy. So I'll need to do an overlay to show you exactly where they are. If you have the indicator, you can just zoom in and see them, but when you're looking at a video like this, it can be quite tricky. But what do we see here? It's a very different structure. We've come into very light support. But that light support has held up because the entire crypto market came into support as well. Turning off those visual cues, you can see the lines are very light. That means they're quite weak. Compare and contrast that to total crypto market cap and you can see a world of difference. The focus is on XRP, and a lot of people would just go to the XRP chart. This is a huge mistake. All charts are intercorrelated and interconnected. You're looking at many charts, not just one, when you look at one chart. For example, when you look at XRP, you're actually looking at total crypto market cap plus Bitcoin. When we look at the smart money support lines on XRP, it's very obvious they're quite strong. And as Bitcoin was coming down, XRP was getting caught by these very strong lines. What did it mean? It meant that Bitcoin couldn't pull XRP down to the same degree and extent because CTKS structure overrides. It also applies to total crypto market cap. You can see on an overlay, that's Bitcoin, and Bitcoin became weak around this 75-cent mark for XRP. Just note how XRP's price structure actually withstood the onslaught of Bitcoin coming down. There was just so much support underneath XRP's price. Another thing to note, all of these smart money buy levels accumulate. The more you have, the better it is. The more buyers will come in and actually push price up. These lines represent where smart money is buying and selling. And look at this retest. It came down and tapped that 75 level and just resumed back up. There are a lot of benefits in knowing where smart money is buying and selling. The beautiful thing, you don't have to look at a price chart like this. You can just throw your TradingView indicator on and you can see it like this. The indicators are available at ctksmethod.org. If you're liking the content so far, please smash that like button and don't forget to subscribe and ring that notification icon so you don't miss a thing. And if you're new to the community, a very warm welcome, and you might just like to say hi in the comments so we can welcome you. The CTKS method actually updates more than 270 years of technical analysis. It accounts specifically for explosions and implosions in exponential price action. One thing that separates professionals from retail, professionals gain the market pulse. They look at many charts because they know that all charts are intercorrelated and interconnected. When professionals look at many charts, they understand that these particular charts will seek to move in different directions than each other. And that inversion actually confirms trends. For example, if the VIX moves up, in all likelihood, the major market indices, the S&P 500, the Nasdaq, Bitcoin, Total, and others will move down. That will drag stocks down with it. If the VIX pikes up, it's probable that the DXY is doing the same thing. The critical thing here, these particular Tier 1, Tier 2, and Tier 3, even they move in different directions, they're not actually in conflict. They're playing out a substantial underlying or underpinning relationship. The key is to get synchronized in with the market. It's important to understand how those different charts intercorrelate with each other. Some relationships are direct. If one goes up, the other will go up. Sometimes they're inverse. If one goes up, one goes down. You're looking at the harmony between charts to synchronize yourself in better. Always remember Rule 4, price moves in waves. Price is always moving in a wave. Even in an uptrend, you can get significant retracements. If the S&P 500 just gets rejected at that resistance, and that is likely that that could happen, the S&P 500 moves down. But we also note that total crypto market cap is coming into major support, so we could experience a rally even if the S&P 500 comes back. That's why it's so important to go through all the Tier 1 charts, especially the Tier 1s. Also, I would suggest that you go through the Tier 2 and Tier 3. And if you're new to the service, please go to 00. Just read through everything there. Get to Area 4 and just submit the form, accessing the indicators. If you don't have the indicators already. If you do, everything is good. Financial markets are incredibly complex. There are lots and lots of interdependencies and intercorrelations, and you need to understand these as either a trader or an investor. The Oscar Bollinger CTKS Partial Masterclass Scholarship awardee will be announced within the next week. If you're interested, please fill out the form which is in the description of this video. The cost of knowing versus the cost of not knowing, they're two very, very different things. As a global family, we focus on getting into Zone 3 and Zone 4 and leaving the panic zone and the blame zone behind, because Zone 1 and Zone 2 is where people lose money. Zone 3 and Zone 4 is where people make money and they keep it, as well as becoming fearless. There's huge differences in thinking between Zone 1 and Zone 2 and Zone 3 and Zone 4. If there's a topic that you would like me to cover off here, please let me know in the comments. Financial markets can feel like a roller coaster ride until we master fear with courage. We do that by being dedicated and committed, by winning or learning and never blaming. As soon as we blame, we disempower ourselves, but it's worse than that. We only blame when things don't go according to plan, or according to expectation. Inside financial markets, certainty is a myth, but stacking of probabilities and intercorrelations and interdependencies are an absolute fact. Therefore, blame is about chasing certainty. And when things don't go as anticipated, we get really angry, look outside ourselves. In financial markets, the market doesn't care. It will never know you. It will hand you losses as lessons. That loss should be converted into a rule. When you convert a loss into a rule, you're seeking to avoid the loss in the future. If you ignore the loss, you'll get it again and again and again and again, until you pay attention to it. Please let me know in the comments, what's the greatest lesson you've ever learned inside financial markets? Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.